Hi, and welcome to the third episode of Kanga News, where I'm going to present you with the latest information from the world of crypto. Remember to subscribe to our channel, like the episode, and you can click the bell button so you won't miss out on any information from the world of crypto. Okay, let's start with the first piece of news. Only a few days until halving. Bitcoin mining profitability won't necessarily fall. The increasing Bitcoin network fees could complement miner revenue post-halving thanks to the emergence of ordinal encryptions and BTC-Fi, according to Acorn Trading CEO. Bitcoin mining profitability won't necessarily fall after the upcoming Bitcoin halving despite a 50% BTC supply issuance reduction, Laurent Benayoun, the CEO of Acorn Trading, said. In dollar terms, it's not obvious that miners would be worse off after the halving, quite the opposite. The decrease in mining rewards is going to be compensated by an increase in network fees. The Bitcoin halving is set to reduce block issuance rewards from 6.25 BTC to 3.125 BTC on April 19th. Following previous halvings, smaller mining firms were forced out of business due to decreased blocked rewards. However, this will be different due to the increasing network fees, boosted by ordinals inscriptions and Bitcoin native decentralized finance, or BTC-Fi, Benayoun said. We've seen NFTs popping up on the Bitcoin blockchain, and we've seen a number of projects trying to build DeFi on the Bitcoin network, so all those elements are leading to an increase in network fees. Bitcoin network fees are transaction fees paid to incentivize miner to include a transaction in the following block. Bitcoin mining companies would generally stay profitable if the Bitcoin price remained about the $70,000 mark, Joe Downey, the chief marketing officer of NiceHash, stated. If the price stays above $70,000, most miners will continue to be profitable, since, at current block rewards, they are profitable at a BTC price of over $35,000. Bitcoin miner revenue recorded its second best day in the history on March 6th, recording $75.9 million a day after the Bitcoin price hit a new all-time high above $69,200. Ripple CEO Brad Garlinghouse remains optimistic about the trajectory of crypto market, envisioning its size doubling to an impressive $5 trillion by the conclusion of 2024. His confidence stems from a combination of pivotal elements and macro factors that are driving the crypto space in uncharted territories. Since the beginning of 2024, the overall crypto market capitalization has experienced a remarkable 60% surge, currently resting at $2.6 trillion. Garlinghouse's audacious forecast places this figure on a trajectory to reach $5 trillion by the year's end, marking a monumental milestone in the evolution of digital assets. Garlinghouse's sentiment aligned with the recent success of Bitcoin ETFs, which debuted earlier this year, to overwhelming demand. These products have shattered records, with March alone witnessing an astonishing $111 billion in trading volume, underscoring the growing appetite for a crypto investment instrument. Additionally, Garlinghouse emphasizes the potential positive regulatory momentum in the United States as a critical driver for market expansion. Regulatory clarity and a supportive environment are essential for building investor confidence and attracting institutional capital into the crypto space. Garlinghouse's projection suggests a total crypto market capitalization of $5.2 trillion by the end of the year, underscoring the resilience and maturity of digital assets ecosystem. As crypto gains traction in mainstream consciousness and garners institutional interest, the $5 trillion milestone may soon become a reality, ushering in a new era of financial innovation and opportunity. Ether has maintained its rally while outperforming Bitcoin as market volatility prompts a surge in short liquidations. Ether short positions bore the brunt of market volatility damage as the digital asset rose above $3,600 mark on Monday. According to CoinGlass data, there were over $27 million in Ether short liquidations in the past 24 hours. In the wider cryptocurrency market, there have been over $204 million in liquidations over the past 24 hours. According to CoinShares Research Associate, Luke Nolan, the news of BlackRock's tokenized fund on Ethereum last month is a bullish factor that could be a driver of the digital asset in the long term. This is bullish for Ethereum in the longer term, as the choosing of a public rather than private blockchain and over alternative layer first prove that, in fact, Ethereum's security, liveness guarantees, and strong developer base are enough to maintain its position as a smart contract platform leader, for now at least, commented Nolan.
Kowalski, analysis.
The analyst also pointed to the Ethereum-Bitcoin pair, noting that it is currently at multi-year lows. Ether sentiment is reflecting this. Historically, when Ether has been a hated asset, it has gone on to outperform Bitcoin for a number of weeks or even months. The last few times it has flirted with this level, it has bounced and outperformed by up to 20% in the weeks after, Nolan said. However, Nolan suggested that the US Securities and Exchange Commission is unlikely to approve a spot Ether ETF in May. We have seen essentially zero dialogue from the SEC and subsequent amendments from issuers, which is certainly a bad sign. The flip side of this is that the market is not really expecting an approval, so it is unlikely to materially weigh on prices should the rejection come, Nolan added. Yeah, so what's up with Ethereum? It looks like the positive sentiment towards approval of spot Ethereum ETF is declining. So that can also be supported by the information gained by the CNBC. Let's see. Firms that gained the Securities and Exchange Commission's approval for a spot Bitcoin exchange-traded fund are not feeling very confident that the agency will greenlight proposals for Ether product, according to reporting from CNBC. Van Eck CEO Jan van Eck told CNBC in an interview posted on Tuesday that he expected the Van Eck Ethereum ETF to be rejected in May, the first deadline approaching for when the SEC will decide whether to allow those products to pass. The way the legal process goes is the regulators will give you comments on your application, and that happened for weeks and weeks before Bitcoin ETFs. And right now, pins are dropping as far as Ethereum is concerned, Van Eck told CNBC. Big-name firms, including Fidelity and BlackRock, have applied for a spot Ether ETF over the last few months. Optimism gained steam after the SEC approved 11 spot Bitcoin ETFs in January, but has since dwindled over the past few weeks. CoinShares CEO Jean-Marie Monetti has also told CNBC he was pessimistic about the chances of getting the go-ahead from the SEC. Monetti said he didn't expect approvals at all this year. A similar sentiment is echoed by Bloomberg ETF analyst Eric Balchunas, who lowered his estimates last month, recording the likelihood of approval for spot Ethereum ETF by May from around 70 to 30%. The percentage of Bitcoin circulating supply that last moved on-chain at least a year ago has declined to its lowest since October 2022. On Monday, 12.95 million Bitcoin, equating to 65.84% of the circulating supply of 19.67 million Bitcoin, remain unchanged for over a year, the lowest percentage since October 2022. The metric peaked above 70% with the debut of nearly a dozen spot exchange-traded funds in the US in mid-January and has been falling ever since. Since late December, the percentage of circulating supply that has not moved in at least 2 years has declined to 50.4% from 57.4%. The decline likely represents profit-taking by investors who held coins for 1 year and over, and marks a shift from the holding strategy seen throughout 2023. The urge to sell likely stems from Bitcoin's massive 148% price surge since April's last year and a 50% rally since the ETFs began trading in the US. At press time, Bitcoin changed hands at $70,400. However, it is difficult to ascertain the exact percentage of Bitcoin that left the inactive supply and has been liquidated in the market. According to the data tracking website, Macro, a decrease in the percentage of inactive BTC is a leading indicator for the end of the bull run. Past data, however, show that bull markets tend to peak as the percentage of inactive supply bottoms out and begins rising. Intermittent congestion on the Solana blockchain has forced several crypto projects to postpone their launches. Solana developers say they are working on a fix by April 15th. Users of the Solana blockchain reported increasing issues around network congestion and transaction errors over several weeks. New projects, especially those planning token launches, decided to hold off until the technical difficulties were resolved. Some Solana projects that waited for a congestion resolution included non-fungible token project SuitUp, an altcoin project DACcoin, and a Solana staking rewards platform Surge Finance. On April 6, Anza, a Solana-focused software development shop, laid out its plan to address the network congestion on Solana validator client implementation Agave. Initial investigations pointed to issues around quick implementation, a general-purpose transport layer network protocol as the root cause. The developers said, Anza engineers with other core contributors have been working around the clock to diagnose and remedy bottlenecks and increase network performance. Expect more improvements and changes to roll out over the coming months. At the time of recording, users have reported experiencing delayed sends for Solana tokens on the crypto exchange Coinbase. According to the incident report, Solana has been investigating the issue for over 8 hours. However, the issues do not impact trading, fiat withdrawal, or deposit functionality. Data suggests that the fresh influx on investor capital marks the crypto market entering a euphoric phase. As market participants await the Bitcoin halving, which is expected to send BTC's price higher, investors' speculative interest in the crypto market has risen to levels seen in the 2021 bull run, according to a Glassnode report. This increases the chances of a substantial directional price move. Data suggests Bitcoin's bullish momentum has been building up since October 2023 as the market was pushed into a high liquidity and volatility regime. The crypto analytics firm reported that BTC year-to-date performance is supported by strong demand in spot markets, mirroring a similar structure seen during the 2021 bull run. Bitcoin's flow in and out of exchanges has also increased significantly since July 2023. Glassnode data shows that the monthly average of total inflows and outflows from exchanges is currently at $8.19 billion per day, substantially higher than the 2021 bull market peak. Glassnode expects new capital to flow into Bitcoin since profit taken by one investor is matched by inflowing demand from the buying party on the other side. The balance of wealth is approximately balanced between long-term holders and new demand, suggesting that euphoria phase is still relatively early from a historical perspective. If you're also feeling euphoric about the crypto market, I would like to remind you that you can use Kanga.exchange, where you can buy not only Bitcoin and Ethereum, but also a lot of other cryptocurrencies with a lot of bullish potential. FDUSD has become the fourth largest stablecoin. Hong Kong-based stablecoins issuer First Digital Trust said on Wednesday that it is expanding its $3 billion dollar-pegged FDUSD token to the SUI blockchain after being available of Ethereum, ETF, and BNB chain. FDUSD, issued under Hong Kong's digital asset rules and backed by US Treasury bills and bank deposits to keep its price anchored to $1, quickly became the fourth largest stablecoin behind Tether's USDT, Circle's USDC, and MakerDAO's DAI, amassing $3.3 billion market capitalization since its launch last year. FDUSD's trading volume surpassed $10 billion over the past 24 hours, with more than 90% of that coming from Bitcoin, Ether, and USDT spot trading pairs on Binance, according to CoinGecko data. Sui, created by the developer team that led Meta's shuttered Diem crypto project, has seen a rapid growth in DeFi activity recently. The network's total value locked, TVL, a key DeFi metric showing the combined worth of assets on a protocol or blockchain, has mushroomed to around $700 million from $100 million 6 months ago, DeFi Llama data shows. The expansion to Sui also makes FDUSD the first top stablecoin natively issued on the Sui network. Sui hosts $340 million worth of USDC and USDT stablecoins per DeFi Llama. Does the topic of stablecoins sound complicated to you? You don't exactly know how it works? Go to Kanga University and let's solve this mystery together. That was the third episode of Kanga News. More coming up soon. If you liked the episode, remember to leave us a thumbs up and also subscribe to our channel. See you soon in the next episode. Bye!
We are Kanga, beyond crypto.